You've probably noticed recent increases in everything like food, gas, real estate, and other prices have led to a significant increase in inflation. And whether you realize it or not, each year the IRS actually adjusts tax brackets for this inflation. And with it currently being around anywhere between the 7 to 8% mark, 2023's tax bracket changes will bring some welcome COLA or cost of living adjustments relief for millions of Americans. Now, the IRS released these new tax brackets, and in this video, we're going to break each of them down, including the standard deduction changes, and highlight what you need to know for your upcoming tax returns. And if you're new here, I'm Dr. Jeff Anzalone. A periodontist is on the mission to get you out of the rat race by educating you about your money and taxes. Do me a favor and download the passive income guide below with the link in this video. Now, the IRS announced 2023 annual inflation adjustments for more than 60 tax provisions, including the tax rate schedules and other tax changes. Now, what I want to do is I want to walk through each of these different changes so you're aware of how your money is being taxed, okay? Now, for individuals in 2023, let's talk about this is single, you're not married, filing jointly, you're an individual. So in 2023, if you're making under $11,000, you're going to be taxed at a 10% rate. Okay. Now, if you're making between 11,000 and 44,725, you're taxed at 12% rate. Now, if you start making between $44,726 and $95,375, it moves up to 22%. Now, you probably noticed there's a big jump between these two tax brackets, right? Between the 12 to 22% as opposed to the 10 to 12%. All right. So then if you jump up from 95,376 between there and $182,100, you're taxed at a 24% rate. If you're making between 182,101 to 231,250, again, this is for individuals, to single, 32%. Got it? You're taxed at 35% if you're making between 231,251 and 578,125. And last but not least, if you're making over this, if you're making over 578,125, you're taxed at a 37% rate. So there's actually 7 tax brackets: 2, 3, 4, 5, 6, 7 for single, for individuals. And remember, the biggest discrepancy is right here between the 12 to 22% rate, which is what? This is where the majority of the middle class fall, right? So they're making anywhere from 11,000 to roughly $100,000 a year. So that is where the big discrepancy is. That's where the government's trying to get the majority of their money. All right. Now that we've talked about that, let's move into those that are married filing jointly. So I covered this so we just wouldn't get confused with all the different numbers that are up here on the video. If you are married filing jointly and you're under $22,000 a year, you're taxed at 10%. If you were between $22,000 and $1 and $89,450, you're taxed at 12%. And now you can start to see how this, and actually, let me move over here. And I've tried to line this up because you can actually look at the two and you can actually see how this starts to expand for married couples versus individuals. If you look at the range, 12% range, 89,450, and over here was just 44,725. So it actually expands. Making between 89,451 and 190,750, 22%. Again, pretty large expansion. Going from 197.51 to 364,200, it is 24%. 364,201 to 462,500, you're taxed at a 32% rate. So there's as you can see, there's a lot more room in these brackets when you're married filing joint. You're taxed at 35% when you're making between 462,501 and 693,750. And last but not least, anything above this 693,750, you're taxed at the highest rate, 37%. And just like single individuals. There's also 7 tax brackets for married filing jointly as well. Now, it's very important to understand these brackets because the IRS actually changes them each year, whether you realize that or not. Okay. So now let's talk about the updated standard deduction amounts. And if you're not familiar with the standard deduction, it's actually a specific dollar amount that reduces the amount of income on which you're taxed, basically at any given year, also given to us by the IRS to keep up with inflation. Now, you can choose to take this standard deduction, which we're going to go over the rates in just a second. You can choose to either take the standard deduction on your tax return, or you itemize your deductions, but you can't do both. You have to take one or the other. All right. So let's walk through what the new rates are for 2023. If you're a single filer, or if you're married but you're filing separately, the standard deduction is $13,850. If you are filing as the HOH or head of household, it goes up to $20,800. And if you're married filing jointly, it goes up to $27,700. Now, if you're wondering what it was last year in 2022 versus this year, so if you're single in 2022, the standard deduction was $12,900. And if you're married in 2022, the standard deduction was $25,550. So you can actually see the difference, the changes here and the changes here. And again, each year this is adjusted, just like the brackets. This is adjusted to keep up with inflation. So it's higher 2023 versus 2022. Okay. Now let's talk about a little bit of a different topic. You may or may not have heard about it before. And that's called bracket creep. So it's important to just like the tax brackets and the standard deduction. If you're not itemizing your deductions, it's important to understand this concept of bracket creep, which actually occurs when inflation pushes taxpayers into a higher income tax bracket, or it reduces the value of deductions, credits, or exemptions. Now, the IRS is very aware of this phenomenon, and that's why they actually adjust the tax brackets and the standard deductions each year to help address this. So, for example, let's say last year in 2022, you made $90,000. All right. 2022, you make $90,000. It actually puts you made 90 grand. 2022, it actually put you back then into the 24% tax bracket. All right. But due to the income tax bracket changes, and if you made $90,000 again in 2023, guess what? You're single, you made $90,000, you fall where? Right here into the 22% tax bracket. Why? Because the low end of the 24% tax bracket now went up to $95,376. All right. So let's use a different example. So let's say in both last year, 2022, and this year, you make $100,000 and you fell into the 24% tax bracket this year. And also last year, you fell into the 24% tax bracket. All right. Both years. So just because the income bracket taxes have changed, it's not guaranteed that you're going to fall into a lower one. Okay. So to determine your own tax bracket, you want to make sure that you carefully check the new tax brackets each year when they come out to see where your income falls. Now, tax brackets will more than likely change next year in 2024 and beyond, especially if we are seeing inflation continue to go up. To combat inflation, the IRS must make changes that account for this. So the changes to the tax brackets may actually be larger in the future. However, again, it's crucial to focus on boosting your income, right? You want to consistently try to increase your income each year to deal with inflation, not just waiting on the government to make these changes in brackets. Because again, if you make something that falls into a bracket one year, they change the bracket, you still may be in the same one the next year. But think about this. If inflation, let's say inflation is at 7%, all right? In that first example we talked about, you made $90,000. So you went from the 24% tax bracket to the 22% tax bracket. So you made 90 grand, you fell you fall into a 2% less tax bracket and you make 90 grand again, you make the same amount of money and inflation is 7%, this means that you're actually losing 5%, right? So you have to take inflation into account. Now, being smart with not only how much you make, along with how much you're going to be able to keep, is one of the most important factors of not only obtaining, but also maintaining your wealth from here into the future. All right. Speaking of getting wealth and all these taxes changes, did you know that you can actually use real estate to offset your W-2 income? Did you know that? If you didn't, and you want to learn more, check out this video.